Welcome back. In this video, I want to talk about Superinvestors and what they were buying in Q4 2024. The filing deadline was February 14th, so most investors reported their holdings today as I'm recording this. In the US, institutional investors that manage over $100 million have to file this 13F form with the SEC every quarter. This filing reveals their stock holdings, which gives us insight into their investment strategies and lets us know where smart money is going. However, 13Fs are delayed by up to 45 days, so they don't always reflect real-time positions. I want to start tracking these filings every quarter on this channel, and I'll be covering a select few investors that I like. So subscribe if you want to stay up to date with what super investors are doing. First, I want to start with a quick portfolio update. This was a pretty good week for the portfolio in terms of gains. We're up 3.8%, and we're close to all-time highs. As you might know if you watched any of my previous videos, I buy stocks every Friday. This week, I added to the AMD position and the ELF position. I'm currently down on both stocks, but I don't expect to perfectly time the bottom of these. I thought both companies were deals when I started buying them, and currently I don't see anything but short-term negativity, and I believe the long-term story remains intact for both of these companies, so I just continue to average down in them. So moving on to the super investor portfolios, starting with the big man Warren Buffett. Warren Buffett is the CEO of Berkshire Hathaway, which is a holding company that either owns or buys large stakes in other companies. Warren Buffett is probably the most famous investor of all time, so it's almost mandatory to follow what he's doing. Berkshire Hathaway currently holds $267 billion in stocks, but that doesn't include the $325 billion of cash that they have on the sideline. Well, not fully on the sideline, but earning somewhere between a 5% guaranteed in treasuries. So that obviously tells you what arguably the most famous value investor of all time thinks about current market valuations. But basically, Buffett isn't really buying stocks. These buys that you see here are so minimal. I mean, you see these are the percent of his portfolio, these reductions here. The biggest position is like 0.5%. He's basically just holding or selling his Bank of America shares. In the last few quarters, he also significantly reduced his Apple position, which everyone pretty much lost their minds about, so I'm sure you've heard about it. But he didn't sell any more this quarter, so I guess that's good for Apple investors. Moving on to Howard Marks. Howard Marks is the co-founder of Oaktree Capital, a hedge fund that manages around $4.5 billion. He's also the author of a few books, one of them being a very popular one called Mastering the Market Cycle. I've talked about Howard Marks a couple of times on this channel so far, but I really like his way of thinking about market cycles and investing during arguably overvalued markets. And if we look at the portfolio here, they're mostly selling stocks right now, which to me means that they're more on the defensive side. But this is pretty much in line with what I interpreted from his last memo called Unbubble Watch. And his memos are these essays that he releases every few months giving his economic insights. If you're interested in reading these, they're available for free on the Oaktree Capital website. You can just Google Howard Marks memo. Okay, so we quickly covered the mandatory Warren Buffett, and we got Howard Marks's sentiment that stocks may be a little overvalued at this current time. But now we're going to move on to Chris Hohn. Chris Hohn is the founder of TCI Fund Management, a hedge fund that manages over $42 billion. Unlike Howard Marks's fund, this is a fund that I can actually follow and understand and is more in line with the way that I think about portfolio structure. They have $42 billion in just 10 stocks here. This is a more value-based portfolio, and when Chris Hohn has conviction in a company, he moves in heavy and then he just holds for years. In the past 2 quarters, he's only really bought Microsoft. Microsoft is obviously a fantastic company that grows every single metric well above the market. If we look here, revenue growth of 15% a year is insane for the size of this company. Every segment in their business is growing. The total amount of Office 365 subscribers continues to grow every quarter. reaches new highs. Their free cash flow, pretty good growth there. Their net income of what, $92 billion on a trailing 12-month basis is unmatched. Usually they have a very large cash position, but in the past few quarters, this cash position has been reduced because of their spend in AI. They pay a growing dividend. Their dividend is growing, 10% a year. On top of that, they buy back shares to return more value to shareholders and bringing the total amount of shares outstanding down over time, making you a bigger shareholder of the company over time. Microsoft obviously benefits from their recurring subscription-based segments that just grow and grow over time, like their Office 365 suite. And on top of that, they're the second biggest player in the cloud provider game. A fantastic business with great margins that, as they grow and as they scale it out, is likely to just become more profitable. Now, I don't currently own Microsoft, and I think they're around fair value here at a forward PE of roughly 30, but any major drop in the stock, and I would likely add Microsoft for the stability and the very predictable high growth. Once the PayPal turnaround is done and they're closer to what I believe is fair valuation for the company, I would consider taking that chunk of money, which is around 11% of my portfolio, and putting that in something like Microsoft for stability and predictability. I don't really see PayPal being a major growth company like they used to be, unless Alex Chris, the CEO, can really get some innovation going there again. But when PayPal is at a fair valuation and it isn't ridiculously low valued like it was a year ago, I don't really think that it fits into my portfolio anymore due to the slower growth. Anyway, Microsoft is almost always priced to perfection, and I think it can be kind of hard to get a really good deal for your money with Microsoft. Maybe I'm wrong though. Buying high quality companies for fair valuations, like Chris Hohn is doing, in my opinion, is obviously working. But that's the way I currently view it. At my age, I'm more looking for stocks that can 2x or 3x in the coming years and maybe aren't as established as Microsoft. Or if the stock isn't super high growth, at least it's a turnaround play where the valuation is just so low that in my opinion, it's ridiculous. So basically, stocks facing short-term volatility that I expect to rebound in the next quarters or years, resulting in outperformance. Next up, we have Bill Ackman. Bill Ackman is the founder of Pershing Square Capital, a hedge fund that manages roughly $12.6 billion. Again, Bill runs a portfolio that I can track and understand. There's just 10 stocks here. However, if you've been following any finance news, you might know that Bill Ackman started a new position in January. So it's not showing up here because this reports their holdings as of December 31st, 2024. Anyway, he bought a company that I've been very bullish on, Uber. This is the statement that he released on Twitter. Beginning in early January, we began acquiring a position in Uber. Today, we own 30.3 million shares. I've been a long-term customer and admirer of Uber beginning when Edward Norton showed me the app in its early days. I was also fortunate to be a day one investor in the company through a small investment in a venture fund. While a great business, Uber suffered from erratic management. Since he joined the company in 2017, the CEO has done a superb job in transforming the company into a highly profitable and cash-generative growth machine. We believe that Uber is one of the best managed and highest quality businesses in the world. Remarkably, it can still be purchased at a massive discount to its intrinsic value. This favorable combination of attributes is extremely rare, particularly for a large cap company. We will have more to share about our thinking on the company shortly. They already released more information on what they think about the company, and you can find that on Bill Ackman's Twitter. It has been super encouraging to see Bill Ackman start a position in a company that I just started buying, and it gives me so much conviction in the holding. I bought Uber all throughout January, starting January 10th, and I'm already up about 20% on the position, which is great for gains, but Not so great because I wanted more shares at lower prices. Although this move probably won't stop me from buying more shares in the near future. I think Uber is still a great deal at the current prices, given their great growth. As for the other stocks in Bill Ackman's portfolio, he's adding more to Brookfield Corp, which is kind of like a Berkshire Hathaway, an investment firm that acquires or buys stakes in other companies. They're very focused on real estate and infrastructure and renewable energy. He also holds a pretty large position in Restaurant Brands International, which owns fast food chains like Burger King and Popeyes and Firehouse Subs, and Chipotle, which he is currently and has been reducing his position in. But I just prefer Cheesecake Factory over these restaurants because of their new exciting restaurant chains and the super low valuation on that company. He also owns a bit of Google here, which I really like. I think Google is one of the best valued big tech companies right now. Again, another company facing some short term negativity with competition from ChatGPT and other large language models and various lawsuits going on. I don't currently own Google, and I don't know why. I really should. Google is another company I could see myself switching out for PayPal when PayPal has completed the turnaround. He also added some Nike, which is another company that I own, and I believe that they will get through the issues that they're facing right now. And from what I see, the new CEO is really getting them back on track. The CEO joined October of last year, if I remember correctly, and is really looking promising in my opinion. He also added a brand new position, which is this Seaport Entertainment Group. And it's a company that owns the Seaport in New York, which is uh, a hub for entertainment, dining, and cultural experiences, all with stunning waterfront views. They own the Las Vegas Aviators, which is a minor league baseball team. They own the stadium for this team. They manage this French guy's restaurants, and they own this fashion show mall. This is a very small company that seems to have gone pretty much nowhere in the past 5 years in terms of stock price. And it's an industry I just don't know much about, so I don't have much to say about it. Moving on, we have Michael Burry. Michael Burry is known for predicting the 2008 housing bubble crash. He shorted or bet against the mortgage bond market and made $800 million for himself and his investors. He's featured in the Big Short movie, which is about the 2008 stock market crash, which is actually one of my favorite movies. So if you haven't seen it, I would highly recommend it if you are into finance and investing. I track his portfolio mostly because of the movie, but it's really hard to follow him, as you can see here. Um, he trades in and out of stocks very frequently. Out of his 12 positions here, 8 were new positions last quarter. It looks like he's cashing out a good bit on his Chinese stock bets, which are currently his largest positions. But if you look at the stock price, he has made good money on it so far. What catches my eye here, though, is Estee Lauder. Estee Lauder. Estee Lauder is a cosmetics and makeup company. And I obviously learned a bit about the company when I was doing my research on e.l.f., which is a cosmetic stock that I own. But basically, the entire cosmetics industry has really suffered over the last few years, and Estee Lauder is down almost 82% since the highs of 2021. Since then, their profitability fell through the floor, and they even reported a negative quarter last quarter. But Estee Lauder still owns some of the best high quality brands in the entire cosmetics industry. And if the consumer gets in the better place than they have been in the past 2 years because of inflation, I find it hard to believe that sales of Estee Lauder products won't go up and even back to growth. So those are the investors or funds that I currently cover. But overall, I felt that most of all these investors here were either holding or selling. And if they were buying, they were mostly pretty minor moves. If you want to take a look at these portfolios for yourself, this is from Dataroma. You just go to dataroma.com and you can find all of these uh, portfolios here and just go through them and see what different funds and investors are buying. Now, this website also reports the top 10 buys last quarter, and this is based on 73 out of 79 super investors filings so far, because they still have a couple hours to report today. But if we look at this, the most bought stock was Microsoft with 12 buys. Next was Ferguson Enterprises. We have Berkshire Hathaway, Pinduoduo, which is a Chinese e-commerce platform, CVS Health Corp, which I can't really get behind. Um, I think that's a strange one, that it's one of the most bought stocks when you have Amazon Pharmacy and Hims and all these kind of like e-commerce pharmacy providers coming out. Next, we have CoStar, then we have Flutter. But overall, United Health Group is something that I've actually been really interested in, and I want to start looking into. But yeah, if you want to see the full list, go to the website. Lastly, I want to look at the top 10 most owned stocks here. And number one, Microsoft with 33 of these super investors holding the company. A close second is Google. After that, we have Amazon, which I own. Then we have Visa, a top quality company that I would love to own, but I currently don't. Meta, another company that I wish I owned, obviously. Berkshire Hathaway, again, United Health Group, something I'm interested in. MasterCard, just like Visa, a fantastic and very predictable, fast-growing company. Yeah, go a little bit down the list. We see PayPal, which I own, Nike. Yeah, again, for the full list, go to this company. It's cool to look through. I plan on adding more investors to my list for the next quarter and the next few videos that I make on this topic as I continue to study these investors and find investors that reflect my investing philosophy and my investing strategy. So if you know of any investors on this list that match my way of investing, let me know in the comments below. But that'll be it for this video. See you in the next one.